Hey guys, it's YouTube Analysis and I'm back here with another analysis video. Today, as you can see, it's about Premier Oil. I sense this company is on a recovery. However, do not take this as financial advice, remember, because this is purely an opinion. And I've just seen on the board that a lot of people have been talking about Tony Durran as being some kind of cheeky git or buying for his own good. Let's look at this, okay? I'm going to give you a brief history of the company. So, bear in mind this company had 2.8 billion in debt, right? Looks scary, but then we look at production figures of, for all we know, they could be an increase anywhere from 70 to 80k a day, right? Last time I believe we heard 74,000 went up to a certain number. I wasn't sure exactly what that was, but now it's possible to be in the 80s of thousands of barrels of oil produced a day. Bear in mind, it's rumored that the break-even of Catcher is anywhere from $40 to $45. The one thing that interests me a lot is this company is known to cut costs, so there is a potential that over a period of time, this break-even could be lowered by cost reduction. This company has impressed me, first of all, by its acquisition of the Eon assets. I believe the Eon assets were approximately 14,000 barrels of oil a day. They ended up paying 120 million for that. Seems to be a steal, right? And it's still maintained, and that contributes to a lot of their profit. But bear in mind that's only 1/6 of their current production. Say if we say, I don't know, 83,000, 84,000 as a base figure, it looks like this company is something where they can focus on debt reduction and also profits. If we look at 2016, I believe they pulled a profit of $122 million or somewhere around that number. I apologize if my numbers aren't correct, these are off the top of my head, but after these guys pulled $122 million profit, despite 2016 being the year where we achieved $27 Brent oil, a crazy number to have ever imagined. Not have I ever conceited something like this happening, but we recovered, and it looks like oil's strong because there's consistent draws. One build, I think in the past 13 or 14 there's been inventories, there's been 13 draws and one build. So it seems to be that oil is somehow going against this company right now. But it looks like, I believe, the lock-ins have already been set above the required amount. So there's a vote going on Monday with the lenders. It's basically something just to confirm, I believe, for the shareholders and for the legal work and everything, to show that the refinancing is done and agreed. So then why is the share price still down almost 30% in a few weeks? Or maybe a month, I believe. I'm not too sure. Last time we saw 64 pence, and it was about to go on the verge of the breakout at 68.5, then was somehow denied. I don't know whether this was the shorters to hedge their trade bets, or these were the shorters in case of something autonomous had happened and the refinancing had been called off. Seems extremely pathetic of a move considering the required lock-ins are already confirmed. But an amount of lock-ins more than the required amount. So let's say the probable outcome is once that vote is done on Monday, the shorts on the company, I believe they're 36% on loan. I'm not too sure. It's been increasing some for a while considering the share price has been on the fall despite higher production and I believe better margins or a lower break even. I'm not too sure about that, but I believe from what I'm hearing from sources. So I come across this company and now we look at the market cap. We're going to see why the hell is this not a £1 billion company, right? So we look at that debt. That debt has been large, right? But it's finally gone to be decreased, right? Because if we look at oil price right now and we look at the hedge I believe the company has, of 40%, and also they have circa 50% gas production. So say break even, I'll just put a rough figure and say in this case as they're hedged, it's lower than the oil price. So if we take it this way, they're already in a profit, which means there is a lead to more debt reduction. So maybe that explains the rise today. Maybe it was the rise in oil, but I don't even understand why the share price was down. I believe it was probably filling the chart gap, which I believe I'd seen at 42.75 to about 45. Now that it's broken out of that range, it looks like we're going back into that first wave, beginning of the upside for the recovery post refinancing. Although refinancing has already been confirmed, let's look at this figure here: 234,980,000 pounds market cap for a company with revenues of approximately $1 billion. Say you look at 5 times earnings to 10 times earnings. That's generally an incorrect figure. I'll probably say 3, 4, maybe 5, because this isn't that scale of an oil company. Currently, they're already at that size and still growing, which I think is great, considering natural decline is very low for this kind of a company, and especially this company in particular from the calculations I've looked at. But I'll go to that at a later date, during the recovery and the news flow rich period, which should come within the next few weeks. However, the only risk is something abnormal happens. But here's a bit of reassurance today. So first of all, I am going to disclose I did build a substantial position today, some towards the lower end and some towards the higher end, because I am convinced that today is the day of reversal. Whether or not that means in share price one day or so, it could be out of focus, but I believe this is going to start reversing to the upside, and I can't really come up with many reasons otherwise. I can understand shareholders have been disappointed, but they have to have faith in their CEO that's been working very hard for them. If we look at the facts that are here right now, the sentiment's absolutely disgusting. I mean, most of the stuff posted on this board is unjustified. I mean, all this hatred towards Tony Durant, the CEO of this company, Premier Oil. I think it's a bit confusing. The Zama well in Mexico, I believe, is something also to look forward to in the news flow. The refinancing, unlike many companies who are at depth like this, such as Tullow, Enquist, there's more to name, but I can't name off the top of my head. This company has made a unique approach to it with minimal dilution. You'd expect this kind of refinancing this size to be, say, 80% dilution. Bear in mind it's 20% dilution, I believe. And the worst case, it could be 30, 40, but that's only once it breaches 64 pence, I believe. I think that's something to do with the warrants. I'm not 100% sure on that, I'll need to double check. But this is all spontaneous research. And I can also see more efforts gone towards debt reduction. It looks like, after reading this RNS about the Pakistan business, they sold to Al Hajj Energy or something along those lines for $65 million to put towards debt reduction. It was a great idea in my opinion because that was natural decline. It was prone to natural decline. And if Tony Durant is listening to this, I congratulate you as the CEO of this company, and I wish you the best of luck with the refinancing phase, and welcome to the road to recovery. Congratulations on your purchase today as well. It seems like something confidence for shareholders, although there are some negative. I believe that also these negative views should be justified. If they're not justified, then it's either blatant deramping, could be defined by the short position, because generally a company that pulls this off would be Glencore. In this case, Premier Oil are pulling this kind of a debt refinancing off because the future of the company is potentially much more larger than the 200 million market cap. And if you strip the assets and sell them, you don't get the value that you get long term. So it's much better to be getting shares and also equity in the assets.